Good morning, everyone, and welcome to the Vetiva Breakfast Meeting brought to you by Vetiva Capital in partnership with Frontier Africa Reports. Today, we'll be getting a rundown of the equity and fixed income markets to close out the week, as well as updates from across Africa presented to us by our media partners at Frontier Africa Reports. We'd like everyone to know that this meeting is being streamed live on Facebook and is also being recorded, and the recording may be shared with third-party listeners. Also, we'd like everyone to know that this meeting is supposed to last for only 30 minutes, and it will include a Q&A session at the tail end of the session. However, if you have any questions during the session, you may send them in using the Q&A or chat box functions respectively. Also, if you're joining us on Facebook, you can use the comment section to send in your questions and they will be answered appropriately. To start, we'll be hearing from Simbiat Bada from our Global Equities Desk as she takes us through the performance of the equity markets and her outlook for today's trading. Good morning, Simbiat.
Morning, Victoria, and good morning to everyone. Yes, like she mentioned, I'll be doing a quick review of performance in the BRVM, Ghana, and Nigerian stock market yesterday. Starting with BRVM, the composite index continues its uptrend, advancing by 12 basis points yesterday. And this was on the back of a decent price appreciation in CFAO Motors, Sever, Abidjan, and Bank of Africa, that's in Burkina Faso. All stocks gaining about 3%. Yeah, in comparison with Wednesday's data, volume of traded shares declined by 56%, while turnover also declined by 75%, with ETI recording the highest volume of traded shares yesterday. Going into the last trading session of the week, we expect the market to close the week positive, barring any major sell down in any of the large cap names. Over in Ghana, the market traded down as we saw the composite index shed 6 basis points due to price dip in Standard Chartered Bank and GCB Bank. Both banking stocks were the only losers in yesterday's session. This led to the financial stock index also shedding 14 basis points. In the absence of large trades in MTN Ghana, like we saw on Wednesday, volume and turnover declined by 87% and 69% respectively. And so going into today, we expect the market to close the week on a muted note amid dwindling activity level. And like we've always mentioned, for any of our listeners looking at exposure in these markets, they can reach out to us via email at dealing@vetiva.com or to our sales team at sales@vetiva.com, and we'll be sure to get back to them. Finally, in Nigeria, we saw ASI shed 15 basis points, eroding week to date return to a negative 3 basis points. The red close was driven by losses recorded across sectors. We saw all the indices close red, with the exception of the insurance space that gained 47 basis points. And we all know that those are predominantly penny stocks. So specifically, we had Eternal losing about 9% in the oil and gas space, and Oando as well, 1.52%. And as expected, Oniflower dipped by about 4%, while we also had WABCO in the industrial goods space, and FBN, UBA, GTCO, all in the banking space, all shedding points. And in line with the negative close, market activity declined with volume trading down by 7%, while turnover by 52%, and we continue to see market breadth stay negative. For the last trading day of the week, we expect the market to close the week negative, as we do not expect a major deviation from today's trading session. However, we do expect a bit of recovery in terms of activity level. Thank you, and that'll be all from my end.
Thank you very much, Simbiat. Next up, we'll be hearing from Omarike, and he'll take us through the fixed income and currencies market. Good morning, Omarike.
Good morning, everybody. System liquidity declined slightly yesterday to open at about 53.7 billion positive from the 64.5 billion positive that was recorded on Wednesday. However, interbank rate declined by an average of about 590 basis points on the back of the FS retail refunds that came into the system yesterday, as OBB and overnight rate closed at 7% and 7.75% respectively. Despite the coupon payment of about 77.91 billion that is coming into the system today, we expect interbank rate to trade at higher levels on the back of increased funding pressure as FS retail auction and CRR debit hit the system. The parallel market lost about 10 naira yesterday to trade at 570 naira to $1, while the earning window opened at 412.64 naira to $1. The highest trade that was recorded yesterday was about 413 naira to $1, while the closing rate was 412.07 naira to $1. Brent gained about 4 cents, while WTI lost about 2 cents to open today at 75.71 and $72.59 per barrel respectively. The T-bills market traded on a muted note yesterday, with little interest seen in the secondary market as market players traded cautiously following the NTB auction results. Few trades were executed on the short and long dated maturities, especially on the 9th December 2021, 25th August 2022, and the CBN special NTB, that's the 29th November 2021, with average benchmark rate remaining unchanged at 5.28%. The OMO market traded on a relatively active note, with bearish sentiment seen on the mid to long dated maturities, with trades executed on the 7th December 2021, 26th July 2022, and the 16th August 2022 maturities. Overall, average benchmark rate rose by about 21 basis points to close at 5.96%. The CBN conducted an OMO auction yesterday. At the auction, the CBN sold a total of 20 billion from an offer amount of 20 billion, while keeping marginal rate constant at 7%, 8.5%, and 10.1% respectively. The bonds market traded bullish sentiment yesterday as market participants reacted to the outcome of the NTB auction, where the Apex Bank decided to maintain the stop rate on the 1-year paper, as opposed to the general expectation of hiking rates, given that the secondary market was already trading at about around 7.4% levels on the 1-year paper prior to the auction. We witnessed moderation on bids across the benchmark curve, while offers on the 2050 maturity declined significantly from the 13.5% levels that we saw on Wednesday to settle at around 30% levels yesterday. Trades were majorly consummated on the 2036, 2045, and the 2050 maturities, with average benchmark rate declining by about 33 basis points to close at 12.17%. Eurobond market traded on a mixed note yesterday, with buy-side pressure seen on the short-dated sovereigns and the corporates, while we witnessed some sell-side pressure on the long-dated sovereigns. The corporate Eurobond that enjoyed the most action yesterday was the newly issued Access 2026 Eurobond, with trade volume of over $8 million. In other news, the Federal Republic of Nigeria has instructed its book runners to schedule the global investor call to vote today. The proposed maturities that they are looking to issue at the 7-year, 12-year, and the 30 or 40-year. We'll continue to monitor that space and provide feedback accordingly. For our expectation today, we believe that the current bearish sentiment in the bonds market will persist as players continue to trade cautiously and cherry-pick attractive offers across the curve ahead of the monthly bond auction that is scheduled to hold on Wednesday next week. And for the T-bills market, we expect it to close the week on a very active note as players continue to trade post-NTB auction sentiment. That will be all for fixed income. Thank you.
Thank you very much, Omarike. Before we move on to the next presentation, we'd like to remind everyone that 11 a.m. Nigerian time on the 23rd of September, which is next week, Thursday, Vetiva Capital, in partnership with CGF Plus and IC Securities, will be hosting a West Africa Capital Markets Conference, where key minds in the region will review these markets as well as put forth strategic opportunities ahead. So the conference will be moderated by our partners at Frontier Africa Reports, and some of the speakers include Birahim Diouf, Deputy CEO, Depository, Central Settlement Bank, Cote d'Ivoire, Dr. Andrew Nevin, Partner and Chief Economist at PwC, Dr. Rita Babihuga Nzanze, who's the Chief Economist at AFC, Derek Mensah, who's the ED, Equities and Business Development, IC Group Ghana, and Luke Ofajebe, who is the Head, Sub-Saharan Africa Research, Vetiva Capital. We have sent out the registration link for the event, and it's currently also pasted in the chat box. However, please do not hesitate to reach out to us for additional information if required. So next up, we'll be hearing from Justina Kechuku as she takes us through some other headlines across Africa. Good morning, Justina.
Good morning, everyone. We're starting here from the Southern African region, where yesterday the Intra-Africa Trade Fair 2021 commenced yesterday in Durban, South Africa. Former President Olusegun Obasanjo, who is the chairman of the advisory council, was at the signing ceremony together with other signatories. This year's trade fair is expected to generate over $40 billion in trade and investment deals. First Rand has reported a 54% increase to almost 27 billion Rand in its headline earnings for the year to end June. And in Zimbabwe, the country is expected to raise $200 million in a debut domestic US dollar bond sale. The finance minister, Nkube, says the government is targeting a yield of 6 to 9% on the bonds, which he says may come in small tranches of $30 million each in 6 issuances. And in this East African region, the Central Bank of Kenya warns that the country may default in its debt in the next 2 years if the current rate of borrowing is left unchecked. The bank's governor says the parliament has a key role in ensuring the government does not take on new debt. Afrexim Bank has announced plans to provide $500 million to back up Ethiopia commercial banks through its trade facilitation program. And in West Africa, just as my colleague says, Omorege said, spoke about the DMO who is expected to hold virtual meetings today and next Monday with investors in order to avail them the opportunity to invest in the Eurobond. So we will watch out for that space, and more news will come as time goes on. The World Bank on Thursday announced that it has decided to discontinue the publication of its Doing Business report after a review of data irregularities in the 2018 and 2020 reports. The World Bank says it will
Hello, Justina, we can no longer hear you.
An explosion that hit the military base recently. While Bank of Ghana reports that in the first half of 2021, deposits with banks rose to 110.4 billion Ghana cedis due to liquidity flows from the COVID-19 fiscal stimulus. And in the North African region, the United Nations Security Council has urged Egypt, Ethiopia, and Sudan to resume negotiations in order to reach a binding agreement on the filling and operation of the Grand Ethiopia Renaissance Dam. And Moroccan lender CFG Bank posted a return to net profit of 3 million dirhams in the first half of 2021. And that's against the loss of 22 million dirhams in the same period last year. The UK Export Finance Agency has set aside nearly 9.65 billion dinars or 2.5 billion pounds to support UK export projects in Tunisia. And those are some of the stories across headlines from us here at Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina, for these updates. We have come to the Q&A segment of the session. If you have any question and you'd like to speak, please feel free to raise a hand and you'll be called upon to speak. If you prefer to type your questions, you can send them in using the Q&A chat box or the chat box itself. If you're joining us on Facebook, please send your questions in using the comment section and we'll read them out here. While we wait for more questions, we have a question here. And it says, with the daily 5 to 10 naira depreciation in the currency, looks like we might get to 600, 620 corridor sooner than later. What is your thought on potential reaction by the MPC to arrest this? So I'll direct this question to the fixed income team.
Hello? Okay, thank you so much for that question. So like we said, when the CBN, when they banned the BDCs when they banned sale of FS to the BDCs, we stated clearly that the outlook for Naira is consistent depreciation, depending on the measures the CBN put in place to curb this depreciation. We saw what happened in the months immediately that followed the ban of the sale of FS to the BDCs. The CBN tried to put different measures in place, instructing banks to, open centers as strategic branches to cater to the dollar liquidity needs of customers. That was able to curb the depreciation for a while, but that has not been able to, totally, take care of the problem. So we have seen it come back to bite us. We have seen a persistent depreciation of the Naira in the parallel market. It has been depreciating with like 5 Naira per day, and that has gotten us to the level of 570 Naira to $1 currently. We believe that that will be a major talking point for the committee members at the MPC meeting. And it will be very interesting to see what they decide to do to curb that. But in the interim, we believe that the depreciation will persist because the demand is still there. So, and there is no liquidity in the parallel market to cater for the demand. Like we all know, there are some items that you can't request for dollar through the official channels. So the only option you have is to go and source dollar liquidity in the parallel market, and that is already a huge demand in that space. And with no corresponding supply from the CBN, it means that the black market players can decide to spike rates, and since the demand there is still prevalent, that's why we are seeing this gradual depreciation of the Naira in the parallel market. We believe that if no drastic measure is taken to curb this depreciation, is going to persist and probably maybe get to if it continues at this pace, it might get to the 600 Naira per dollar that, that we are all looking that it might actually get to. But then again, like I said, it will be very interesting to see the measures and the, the measures that the CBN will roll out in this MPC meeting that is concluding today to try to curb the depreciation. Thank you very much.
Thank you very much, Amarige. I see that Dapo has something to add. You may go ahead, please.
Okay, I think he majorly captured the, the history of how we got here pretty much. So it's just to say that the CBN has to react, or the regulators have to react. I mean, it's just a question of what they do. And we've seen yesterday there was, a circulation about a conference call today, and expectations about the new bonds that's to be issued for the local currency, which we believe will provide a strong support. But the major questions become, will the CBN go back to selling to the BDCs to curb this? And today's MPC should be able to provide some color to that. But we expect some reaction from the central bank, because yes, like we said on Monday as well, we tested 530 and 600 becomes the new resistance level if nothing is done very urgently. So we'll continue to watch and see, but we believe strongly that the CBN will be coming out to say something that we hope will be effective in resolving the current pressures against the Naira.
Thank you very much, Dapo. A follow-up question on the Eurobond issuance, the proposed issuance we expect. And what's your outlook for in terms of rates and subscription for the issuance, especially given the success of Access Bank's recent issuance and the expected FMC, I think later this month?
Okay, thank you for that again. So basically, the success of Access Bank's issuance with respect to their note just speaks to how hungry local and global investors are for dollar assets, and that goes to show what we can expect with respect to a sovereign then issuing as well. So our expectations generally, I think the DMO is muting the 7-year, 12-year, and the 30 or 40-year. For the 7-year, we see somewhere between a 5.5 and 6%. When you look at where the surrounding sovereigns are trading, and also when you compare with other sovereigns and the yield point differentials from time currently within the market. Whilst for the 12-year, we see somewhere around the 7% handle, say between 6.9 and 7.1. Again, for reasons earlier mentioned, you see the Nigeria 32s trading around 683, and way further down the curve, 5 years down, 38 trading about 7.4, 7.6 levels. So we see somewhere around 7 on the basis of that, much closer to the 32s at this time. Whilst further down on the 51s or 61s potentially, depending on which is picked. The longest currently is 49, and so for that end, we see somewhere between 8.3 or 8.8%, depending on the tenor that the country pushes. Typically over time, you see about 1.5, 115, 100, 120 basis point differentials between Nigerian sovereigns and Ghana's. And so when you also try to use that to extrapolate, you start to come to a sense of the fact that between 8.5 and 8.9 on that end is realistic. And also when you look globally and you see yield levels, asset managers, hedge fund managers are still looking for yield. It's still a continuous search for yields across Europe, across Asia, across in the US as well. So again, it means they still get some carry return, and they'll be much interested in knowing that these are dollar backed and not the local currency backed that is prone to exchange risk. I believe that covers it.
Thank you very much, Dapo. There's another question, I think a follow-up from BC Sander. And he says, is the CBN meeting the demand for qualified users of Forex? It cannot be the demand for ineligible transactions alone that is in the parallel market. Your comments, please.
Okay, so these are very gray and tricky areas, but what we understand generally is today when you submit your bid for auctions, you get filled somewhere between 15 and 20 or 30%. But the problems are quite clear in the sense that literally what every Nigerian purchases from supermarket and everywhere are largely imported. And most of these things don't source their dollar from, are unable to source, let me use that word, unable to source their dollar from the official market anymore, either because the waiting times on the queue or because they have been exempted from the buying, from the list of what can access. So much of the demand has moved to the parallel market over the years and in recent times. So when you then see that the little supply again that is, yes, quote unquote, being subsidized, that goes there, is also being closed out, it creates a problem. And everybody knows that the longer this thing goes, you see another devaluation. Most of these companies, they already have letters of credit that they need to pay on, and they've sold some of these goods and have collected revenue at particular rate, and then it becomes a problem. So you won't fault that most of it will most likely be in the parallel market, as you've rightly alluded to. So it's a big one, and yes, the central bank is trying. Central bank has done a lot with respect to trying to force transaction or push transactions, pardon me, through banks and create a more structured and legitimate means to ring fence round tripping, to ring fence arbitrage and subsidy in that word. But again, we need to just find a way to meet the real demands, the demands that are evident and clear. So it needs, we need to go back to pushing more through the official market. When bids are submitted, we need to make sure we meet much of it stronger rather than the 10 to 20% we understand from banks is what people that are requesting for dollars at those windows, retail market, SMEs market, amongst others, get. So yes, that's the real challenge. You're correct that most are not being met in the official market, and yes, they're in the parallel market.
Okay, thank you very much, Dapo. If there are any other follow-up questions or any other questions, please feel free to send them to us using research@vetiva.com, and we will get a response to you as soon as possible. We have come to the end of the session. Please be reminded of the registration link that is posted in the chat box. We thank you all for joining the session today. We hope that you have a lovely end to the work week, and we hope to see you same time on Monday morning. Good morning.